There we go. Well, I hope you got those SPY puts. Woo! Wow. Wow. That's really all I have to say here. It's kind of I have to say, we've talked a little bit about the potential for the punching bag of this market continuing, and a lot more pain coming over the next 4 or 5 months. Let me put it this way. I had no freaking clue we would see Bitcoin and Ethereum eviscerated to the resistance levels we've been talking about the last 2 weeks in 12 hours. I also had no idea we would see the S&P sell-off that we've been talking about, potentially leading to even more of a sell-off in the tech and consumer discretionary. This is a little bit of market pain. Let's go ahead and take a look. The severity of the movement today is quite interesting. Let's take a look. Wow. You know how usually we have like half of a page of green for up and half of a page of like red. I'm sorry. We usually scroll. We scroll to look at what's red in the pre-market. We scroll to look at what's green in the pre-market, right? We do this every day, folks. Every day. We hang out. We like each other. We know each other. Today, we kind of all hate each other. Look at this. The only things green in the pre-market are Yelp, Target, and Salesforce. Dogecoin is at 32 cents. It went as low as 19 cents in the last 2 hours. Oh my gosh, did. Well, let me go to the 30-minute chart here. Really? Oh, wow. So it's at 32 cents right now. Is that right? Or hold on, 30 minutes. Yeah. Webull is showing that Doge literally hit 19 cents within the last 2 hours here, and has since rebounded to 32 cents, but certainly had a little oopsie doopsie tumble or doobly. I don't even know anymore. I'm out of words. I think that's the way to look at it. Here's Bitcoin. Bitcoin hit a low of 29,258, sitting at 33,000 right now, which, folks, look at the line I drew. I mean, yesterday on the millennial, and we've talked about this in other live streams. I'm like, we have weak support in the low 40s. I'm worried that it's going to go from the low 40s, plow right back down to that 32, 34 level. A line was already drawn. That's crazy. I will say, I did not think it would happen in 12 hours. Same thing with Ethereum. Because I said, hey, I'm waiting for Ethereum. You know, when should I buy Ethereum? And we were talking about this. When should we buy Ethereum? Just yesterday, I talked to this last night. I'm like, I don't know. I'm going to wait for the low 2000s. Oh, here you go, Kevin. Look, this is, wow. I have to say, I said that expecting a slow downtrend. This is a plummet. Let's take a look at some of the other things in pre-market here. Woo! Good thing I dumped some of those options yesterday. My short-term ones. All my longs, I don't look at those until 2023. So what do we got over here? Gee whiz. So we got Marathon, Riot, the Sisters, down 16%. Coinbase is just evaporating. Like the management probably did the best job ever at designing a company that would just evaporate in a market crash. So here's your epitome of or the butt of the joke. Coinbase. We've got AMC is down 7%. We are rebounding a little bit here, right? And as we go into the open here, at least on AMC. Personally, and I'm jaded, I wonder if this is day traders waking up and they're like, I gotta get my AMC position in for the day. Who knows? Microvision, Momentum, BNGO, Workhorse, Momentum, down. All these guys, 6% here. EXPI, Palantir, DoorDash, Square, Affirm, Zom, Roblox, all 5%. MP Materials, Tilray, Genius, Tesla, all down about 4.75%, along with Lemonade here at 4.63%. Tesla's at 550. That's it, folks. We're going to 100. Cheers to 100. Wait, I gotta hold it the other way. I gotta hold it this way. There we go. There we go. See, at least we have 2012 Kevin on the mug. Oh man, I don't actually believe Tesla's going to 100. Well, I'll only put it this way. I'm very happy. Got rid of my margin, because this is the kind of market where you go, whoops, didn't see that coming. And see, this is a fantastic concern I have, is that this is the kind of crap right now, this market, that is going to lead to the over-leveraged nature of crypto showing itself. I'm worried about it. I'm very worried about it. Now, don't get me wrong. I like shopping, okay? But the rate of that decline is, people are getting margin called. You know it. Because look, people who bought at 64,000 and they took leverage of whatever they could, you can usually take 50%. Generally, if the market starts falling about 30%, you start getting margin calls. Well, Bitcoin's off like 50% from its highs. So you know people are getting margin called left and right. The market is over leveraged. There's a reason I'm like, that's it. Get rid of all leverage. Because the risk of something like this is present. But this is, whew. What else do we have here? Xpeng, 4.28. Virgin, where is it here? Virgin, 4.55. Hyliion, 4.15. Fastly, 3.96. Bumble, 3.72. Redfin, 3.36. Nvidia's down 3.23. Rocket Mortgage, my gosh, down 3.18. Moderna, Nordstrom, Wayfair, Churchill Capital, all these guys sitting in that 2.5% range. Where are the moderate ones? Okay, so you see like Apple. Here's your classic, like just holding up the indice basically. That's what's happening over here. So nothing's pretty much green. Slack did just turn green, so we'll see how much this recovers here once the market opens. But yeah, this is a look, S&P. I mean, there's a lot of pain in the markets right now. The S&P is only down 1.2%. It's still relatively close to all-time highs. I mean, this is not even a correction over here in the S&P, right? What have we talked about in the S&P? We've talked about the S&P potentially, who knows, correcting down to 32 to 3,500 as part of sort of the everything crash, right? The everything sell-off. S&P 500. We're at 4,100 right now. You know, this is barely a blip on the radar of the S&P 500 chart right now. So what's most fascinating to me is how long is this crypto sell-off going to last? And for every 1% decline in the S&P 500, are we going to see that much extended pain in some of these other sectors, whether they're momentum or certain tech or whatever? Well, we'll see. I do believe in my rubber band theory. We'll see if it snaps. Let's listen into CNBC for the opening bell.
The farm that I bought with Ethereum and with Bitcoin,
yeah,
DirecTV can't work the satellite, so I can't see the Eagles.
Oh, no.
No. They say I have to chop down a tree.
Well, chop down a tree.
Oh.
Guys, let's get the opening bell at the big board today, celebrating a direct listing. It is website hosting company Squarespace at the NASDAQ, Ares Capital doing the honors. Jim, Squarespace on Squawk earlier this morning, 40 million A shares. SQSP is going to be the ticker. What do we think about it?
Look, I use Wix for my restaurants. Wix is an incredible bargain. It's really fantastic. Andrew Ross Sorkin was talking this morning about how he likes this company. This is the kind of, I would say this is kind of precisely the company you wouldn't buy right now. It'd be terrible. These are the overvalued stocks, but maybe today's different. Maybe this is direct listing that works. But in terms of what people should be buying right here, it's probably the antithesis, David. I say that because the ability to be able to design a website is something that you can already do with Wix in a very inexpensive fashion. So do we really need these guys right now? No, and no more than we necessarily need Oatly, which is coming our way. These are things that the bankers are just saying, let's jam them down the throat. Let's get this deal done. The quarter's starting to be not so great. And then that's Oatly. The direct listing, of course, they don't make.
Speaking of direct listing, Coinbase.
Look at that S&P heat map.
It was, right?
Yeah.
Wow.
Down,
How's that doing?
Not well. Coinbase, as you
Then
might
again,
expect, going
right
on in crypto
What's
with
doing
that
well?
significant decline. Not much on our real-time exchange, which
I'm
we
just saying
actually
that this
is right here.
This day feels like more of a washout day, a crescendo day. Everyone's really panicked. David, the youth buying crypto right now, they are petrified.
Maybe they're getting a life lesson.
Yes, they are.
Carl, there is a large cohort out there that trades these cryptos the same way you would trade stocks, and they trade them. And well, they're looking at their accounts this morning, I guess, Carl, and perhaps they're getting a bit worried. But who knows? Maybe they've been at it for a while and they still made plenty.
Well, people trade sneakers and have done quite well.
Yeah.
Coinbase, of course, I think the reference price was around 250. Clearly below that today at 210. There are lots of reports, guys, about difficulties at the company trying to keep up with demand. Some screenshots being shared of people unable to access the site. And Jim, that comes on top of the convertible, which is 1.2 billion. We would have talked about that on a normal day.
Yeah, I mean, I was hoping that these guys would actually handle themselves.
Okay, we're gonna go ahead and pull off Coinbase. An error has occurred. Oh gosh. So we are getting a bit of a recovery. Keep in mind, if I buy or sell any crypto, I do also send buy-sell alerts in my Stocks and Psychology of Money group. Maybe I did a little bit of shopping. Who knows? Maybe I said I would do some shopping, and maybe I did. But anyway, you do have that coupon code to the moon, likely now expiring Wednesday. Marketing's pretty much almost ready to go, so pretty excited about that. And yeah, let's see what else we have here. So, but it's beyond that. It's not just the buy sell alerts. You and the lectures are going to help you, especially in times like this. So let's see how things have opened. Well, here, congratulations. Let's go ahead and start with the greens, folks. All right, today we have Take-Two Interactive. Wait, hold on. All stocks here. Let's go to the green. There we go. Okay, we have Target, Salesforce, Agora, Take-Two Interactive, and the Russell green today with Target up almost 4%. And that's it. That's all we have. That's green. That's it. That's all. Yeah. So now let's go to the red. Okay. Doge is at 35 after having dropped to 19 cents. Ethereum is at 35.66 after having dropped actually even further. It fell to 1,800. Bitcoin fell to 29,000. It's actually climbing again. It's at 35 here right now. This is kind of snazzy. It's all trending up right now, actually. You've got Marathon. Marathon and Riot trending up. They were down 16%. They're now going up. Coinbase is just basically following crypto to the toilet. So if you like toilet bowls, here you go. You've got toilet bowl opportunities for you. But I will be transparent. I did buy this morning. I did already buy. I said I would buy. I woke up. I just did some buying. Let's keep going here. Western Digital, Seagate giving up the Chia run. Purple's down 5.91%. Virgin Galactic down 6%. MP Material down 5.77%. Gevo, Shift, BNGO, and Tesla all down in that 4% range. They are recovering. So we've been seeing about a recovery here for about 20 minutes. Slow, steady kind of recovery here. No guarantees we won't test some more of those March bottoms. Remember, Tesla did get down to 535 for a moment in March, and it got down to 545 20 minutes ago. It is currently at 553. We've got Rocket Mortgage actually trending down more. Macy's kind of mixed. Let's see Rocket or Neo here. Neo tried recovering, but it's falling back down. You've got EXPI rotating to the upside. Square's got a nice recovery here. It's still down 3.44. The last 20 minutes have been very green for Square. Square at 196. It's under 200. I like it under 200. We have Darden is down 2.61. So you're even seeing the recovery stock sell off here. It's really a little bit of everything. Etsy is down 1.3%. The food stocks actually not doing that poorly. Domino's and some of these others actually only down about 1% here. So the food stocks holding up very well. The Amazon, Facebook, so FANG down about 1% and bit. So these guys really holding up. It's really Bitcoin or crypto related right now. That's very interesting. So you are getting a little bit of a candlestick to the downside again here. We did just temporarily see Ethereum rotate back to the upside. Now it wants to potentially turn around a little bit here. Either way, Ethereum sort of bouncing around those rough resistance levels that we've been, I should say support levels. I'm sorry. I haven't had my coffee yet. It's really the support levels, which used to be resistance levels that we drew back when Ethereum was like 4,400 and 3,500. And even yesterday we were talking about this. Like if it falls, the next levels of support are in the low 2,000s and the low 30,000s for Bitcoin and Ethereum. So how long it'll stay here, I don't know. I don't know if we'll drop through these supports. These supports lasted a while. Remember that these support levels lasted, Ethereum quite a bit. Bitcoin lasted at least, I want to say 10 days. I know that doesn't sound like a lot, but then again, they've all been skyrocketing so much. 10 days in the world of crypto is a lot. Let's take a peek at, I want to take a peek here at CoinMarketCap. Let's see what some of the others are doing. All right, here we go. So, oh my gosh, Cardano. Oh man. Oh my gosh, I said I wanted to buy it in the 130 range. Oh, it's so juicy. Oh man, this is where I said I wanted it. And it's literally giving, oh wait, what happened? It just went to 152. But that was weird. Oh, where'd it go? Oh. Wow. Darn it. It just updated and it went to like 153. Wow, that's crazy. It literally went to the range where I wanted it. Now it's not there anymore. Oh, man. Am I losing my mind? Or did we go to this page and it said 128? Or like 120 something? Ay. Oh, man. All right. So, all right. So what else do we have here? Let's go ahead and listen to CNBC for a moment. I'm going to get our term up. Let's see what's going on here.
Back together with Viacom. Apple talked to Jeff Bewkes and Time Warner. Eddie Q would get these meetings, and then they bring Tim Cook, and then he's like, oh, what am I doing here? No interest. Discovery, Apple talked to, or at least there was an outreach. And then again, kind of the same story of Tim Cook comes to dinner with Malone and Zaslav, and they're like, well, what are we here to talk about? So they've never pulled the trigger.
But never, David,
never, ever.
And check out Fox Business. We didn't talk about the border wall yesterday.
Easy to use.
If you haven't seen it yet, I was actually on Fox Business yesterday, which was really, really cool. But now they're on commercial. I did upload it to the channel so you could see it. But, okay, fine. I guess we're stuck with CNBC not talking about the broader sell-off in crypto or the market, but instead talking about Apple. Let's get Bloomberg Live up.
Do if you're Apple, or do you just continue to sort of move along, or do your shareholders say, why bother?
Nothing.
Give us the money.
Look, David, this morning Barclays says the service revenue stream is decelerating. Well, how about you have an app store, David? Now, of course, obviously there's a lawsuit where they generate all this content. You don't have to do anything. It's like YouTube.
All right, whatever. So folks, an issue here really is that why is it that stocks are selling off amid this inflation fear? I mean, look at this headline here. Oil slides towards $64 as inflation weighs on the market. Inflation rekindles niche market for duration-proof credit. Specter of 1960s inflation takeoff haunts U.S. economy. Okay, so brief history lesson. Korean War ends. War-style inflation evaporates in the early 1950s. And you get this period of about 17 years, 16 to 17 years of literally low inflation like we have now. I'm talking 1.5 to 1.3%. Back in the 50s and 60s, very low inflation. But then you get to about 1967, and you start getting inflation taking off, mostly because of manipulation in the market via price controls, specifically what happened with us leaving the gold standard in the early 70s. That was bad. Now, I don't think we have those kind of crazy things going on right now, but let's see what Bloomberg references, because I haven't read this yet. Okay, so they're talking as 1965 as the year that started years-long climbs. Well, I usually think of 1967, but okay, fine. So they're seeing it as 1965. 1965, the year that started, or that marked the start of a years-long climb of inflation into double-digit levels for the following decade. Yeah, now keep in mind, there's some really crazy things that happened in that time. Leaving the gold standard, wage controls, price controls, I mean, lots of things. So if they don't mention that here, I really feel like that is a disservice. All right, here we go. Let's see here. Okay, 1965 with the Great Society spending programs. They're comparing the Great Society spending programs to Joe Biden. Well, one thing, too, is you had sustained spending programs in the late 60s compared to these, what are seen as more one-off spending programs by Joe Biden. However, I'll tell you, these kind of fears are probably going to cast a lot of cold water on Joe Biden's ability to get a $4 trillion plan through. Congress ain't going to be very happy about this. Some economists see disturbing parallels. Yeah, why aren't they talking about what was different back then? I'm shocked. They're just drawing the parallel, but they're not talking about what was different back then. Look, inflation in the late 1960s. It's annoying. I don't know. Is the History Channel actually going to give us a detail here? All right. Expenditures. Okay, here we go. What did I say? By 1966, the government wage and price controls were breaking down. This, combined with rising interest rates, signaled the end of non-taxationary solutions to control inflation. In other words, the way that they had in the 60s started implementing these wage price controls to put limits on how much prices could go up. And so they're artificially manipulating the market. It was almost like they were trying to cage the market. And so you had a lot of manipulation. Look at this. 1967. This is what I remember. Not that I was there, just studying. Lyndon B. Johnson, I recommend to Congress a surcharge of 6% on both corporate and individual taxes to last 2 years or so for as long as unusual expenditures associated with their efforts in Vietnam continue. Oh my gosh. Congress did not pass the act until 1968, at which point the legislation levying a tax also required a reduction in government spending. Oh my gosh. So you have more spending in the Great Society programs. You had more taxes. That kind of sounds similar, right? But then a forced pullback in spending because inflation starts going nuts. Oh my gosh. I see the similarities. But there was a whole lot of manipulating going on in the late 60s and early 70s that led to some insanity. See, this is why I said 67 for me was more of the tipping point. See, Bloomberg said 65. I don't know, fine. You went from 1.7 to 2.8. Here, look at that, 67 to 68. That's when you started getting the bump. 4.2, 5, 5. And then in the 70s, when we left that gold standard, that's when things went even more crazy. But again, a little surprised they're not giving us a little bit more depth or a little bit more color here. It looks like I've looked at this one before. Wonder when I looked at that one. Forensics of the Great Inflation. Yeah, 1960. Okay, whatever. I mean, we're not going to spend a lot of time on this. But, here we go. Look at this. The late 60s and 70s were a turbulent time for the U.S. economy. Johnson's Great Society legislation brought about major spending programs to achieve a array of social initiatives. Wow, is that not similar to Joe Biden's social infrastructure, child tax credit? Maybe make it permanent and let every child get essentially $250 to $300 per month, depending on age. Growing fiscal imbalances, complicated monetary policy. So they're really talking about Congress's spending problem, making the Federal Reserve's life easier. Very, very similar, a really cool echo to the late 60s. Again, I'm surprised Bloomberg didn't talk more about some of the actual differences, but they certainly are referencing a time period that I have been studying. In order to avoid monetary policy actions that might interfere with funding plans of the Treasury, Fed would not allow. By the way, the Fed also reacted very slowly to inflation. And this is a mistake that nobody actually expects the Fed to be likely to repeat. The Fed is likely to react quickly to inflation that they believe gets out of control, which they did not do in the late 60s and early 70s. They waited way longer than they expect Jerome Powell is going to wait today. Trust me, J. Powell, he will change course if he needs to. I don't really expect him to. I think right now this is still along his master evil plan. But he did it to us in 2018, and he did not care about the stock market, okay? They don't, like, people think, oh, it's the Fed bailout of the stock market. They care about the functioning of credit. That's it. All right. Well, we should go back to the sticks. But this is very, very interesting, and that is a fascinating time to relate to. So we do have Ethereum bobbing around this 24 level here. Dogecoin around 34, Bitcoin bobbing around this 35, 36 level here. Not the lows we hit, but this is kind of where we're getting the bob. We do have the OTC stocks all of a sudden opening here, getting wrecked. Anything crypto related, evaporating. Big Digital down 18%, Voyager down 15%, Marathon Digital down 12%, Riot down 11.8%, Coinbase not down as bad as it was, but down to 9.28 down 9%, down to $216. We do have a little bit more green in the market right now. Target, Aurora, Social Capital. Hey, look at that. Tattooed Chef is up 1% today. And Enphase is up a little bit today. Looks like we're starting to get maybe a little bit of recovery in some things that are trying to trend around. But golly, what a wallop on the market. I don't have all the research, but I do believe we have, I really think the Bloomberg authors here whom we were looking at regarding these headlines about inflation, I think they should really do a little bit. Oh, wow. Bitcoin plunge wipes $50 billion from value in crypto rut. But I really do think that they should be talking more about some of the differences, specifically leaving the gold standard in the 70s that led to this insane inflation. And also remembering that the cage of wage price controls broke in the late 60s from these social programs. This is bad news, I think, for Joe Biden's taxation plan. It's bad news for Joe Biden's $4 trillion infrastructure plan. Quite frankly, the stock market is going to cheer that. The stock market's going to say, yay, good. We don't want your infrastructure plan. We don't want your taxes. We want maybe a smaller infrastructure plan. Don't get me wrong. There are going to be people who are, not so happy about this likely meaning the, what's it called? The EV sector is not going to get all those chargers it was promised. Not going to get all them credits it was promised by Biden. Totally possible. So anyway, we almost have a full page of green. Peloton has rotated to the green. I feel like this is like a ship that's sinking, and these are like the people who are like we're on the like rescue boat already. It's like the Titanic. We're already on the rescue boat. Everybody else is still underwater trying to get out of the ship, and we're on the rescue boat just watching. It's like, who's bobbing up next? That's pretty gruesome, but it is kind of what it feels like. It's like, there's Peloton. Pull them up. It's so bad. It's just what it feels like. Because when the ship started sinking 20 minutes ago, I mean, there were like 3 people on lifeboats, okay? So we're getting more people aboard. I'm just worried we're as efficient or as inefficient as the Titanic was at rescuing people here. Oh man. Wow. What a slaughter. What a slaughter of Bitcoin. What a slaughter of crypto. You know, look, yesterday on our group podcast, we literally had a whole segment about how cryptos, in my opinion, are likely to fall back to their resistance levels that we've previous resistance, which is now support levels. So the previous support levels of that 3,400 range, that low 2,000s range, that low 30,000s range for Bitcoin. I'm a little surprised Bitcoin's sitting at 35 instead of like around 33, but that's okay. A little bit of buy the dip happening here, pushing this back up. But I have to say, in no way, shape, or form did I expect it to happen within 24 hours. We also had a debate about technical analysis, about how technical analysis maybe doesn't matter. And I'm like, no. It matters in the short term. It's real in the short term. And those support lines are real. And we saw that. This is very, very, very quickly here. Much quicker than expected, though. I mean, really, this 12-hour, flip here has been incredible to the downside. And Tesla, I mean, this looks, it's just like this is a mess. Not recovering at all. Thank you for the shout out there on the campaign. We got to stick on. We got to focus on stocks here, though. We got to focus on the sticks. We got to focus on reminding you to use that 39% off coupon code, which we're expiring Friday. Marketer told me we're ready Friday. So that's in 2 days. So if you want to learn my psychology, get those private live streams as well, where we also talk a lot about expectations, how to deal with it, how to deal with a market like this. It's like in these times, it's a mental health support group. In other times, when it's going euphoric, it's it's like a weaning you off of the highs of the market group. It's exactly what you want when you want it. In addition to obviously all the recorded lectures, check it out. It's really good. Link down below. I think you'll like it. Look at that volatility index spike. Look at that double, the Twin Peaks, folks. The Twin Peaks. The Twin Peaks. There it is. Oh man. We were not. It's funny. We were looking at the VIX, the CBOE volatility last week. And last week we said, it's interesting how oftentimes when we get these spikes over the last year, or have gotten these spikes over the last year, the biggest one was always the first one. With the exception of this moment where we got Twin Peaks right here. Although it was still true, the first peak was the biggest, but we still had Twin Peaks. We didn't, and then this was just a disaster, right? So March was obviously a disaster, March of 2020. But look at this. You get the big peak, and then you don't get the peak anymore. Peak, no peak anymore. Peak, no peak anymore. Peak, no peak anymore. Maybe a little bit of a rebound there, But here you had Twin Peaks. Starting to look like a Twin Peaks over here, although it does look like it'll be a lower here. I do expect the volatility index to go down throughout the day because we are starting to see some things turn green here. Look at Target. Target rallying up 5%. It's like Target's the only lifeboat right now. Why? Did they report? Maybe they reported. I don't know. Let's see what we got here. Where's the news bar? The news button's gone. Order flow, financials, releases, 8K, May 19th. Oh, they were okay. Company update. Oh yeah. All I can say is this is insane. Nice. Okay, so we're really playing the support now at Ethereum and Bitcoin. We're really playing it now, which is good. We have that, very, very, very brief dip below support, and very quickly rebounded to that support we were expecting. And this is where we're playing ball right now. Although I did expect it was going to be closer to 32 to 34 at Bitcoin, and it's sitting closer to that 35, 36 level. So not as bad. And Ethereum, between 22 and 24, spent more time sitting in that mid 2450 range, kind of mid 2450. Yeah. Doge, actually impressed that it's here. I thought it would have sat, around 35, 36 as well. I also thought this would have sat a little bit longer around 32, but we're close. We certainly saw these, some of these levels hit here, though. Woof, a mess. TA, though, I'll tell you, you gotta respect the technical analysis for understanding some of these dips. I want to take a look. What's Jim? Are you being boring talking about GE? I don't know. Let's see.
With me, those are two good ones.
Yeah, and we look forward to seeing more of the Lightning later on tonight. Jim, how about MAD?
Okay, so we have Cisco. They report tonight. I think it's going to be a good quarter. Could turn around tech, frankly. Take two. Strauss-Zelnick reported an
Okay, whatever. Talking about what the heck is ahead in the day. Boring. So let's see what we have here. So we have okay, what else is going green here? Okay, what else is bobbing up? Oh, we got what else do we have here? Oh, tattoo's going red again. Uh-oh, it's going red again. That's it. Hit $20. Hit $20. Time to dump. See, look at that. So it's those levels, man. $20, dump. $16, buy. That's incredible. Yeah, down about 1/3% now on TTCF. Visa, Airbnb, Facebook, Apple, Intel, 1%. Ford, 1.25%. G-Tech Holdings, 1.79%. Plug Power, 2%. Delta Airlines, 2.3%. Palantir, 2.69%. Gores, Matterport, 3%. EXPI down 3 1/3. Lemonade, 3.75. Tesla, 4.65. Sundial, QuantumScape, Express, Gevo, MP Materials. These guys all suffering 6 to 7.5%. Voyager Digital, 10%. It's not as bad as it was. Where'd it go? I don't know where it went. Anyway, let's go ahead and give Fox a listen here. Let's see if Fox has anything for us. Fox, what you got? A TV commercial about pillows. Oh, it's my pillow. Okay. All right. Just look at news. It's nuts. Look, I didn't want to be right. Conscious says, Kevin, you're right. I didn't want to be right. I said that too. I go, people are going to have a whole lot of pain if it happens. All I did was look at the chart. I don't feel like it was that special. But, I mean, hey, whatever. I bought. I said I would buy when I hit my levels, and I did. Well, it still feels like throwing. It still doesn't feel good, though. Even though it's like, oh, that's when I said I would buy. Okay, here I go. I'm buying. I'm doing what I say I'm going to do. It still don't feel good, because you get a 12-hour sell-off like this. It's very, very disgusting for cryptos. Like very, very, very ugly. I mean, see, folks, the problem, okay, the problem with this, longer term is it literally goes to show again to institutions that crypto's not there yet. It's not stable yet. How and I'm not trying to bag on cryptos. I'm siding with the hodlers here in expressing frustration that these kinds of sell-offs help keep the reputation up for crypto being too volatile to actually be sitting on folks' balance sheets at companies. You know? Sorry, I'm tired of this market.
A big sell-off going on here. Up and down, mostly down. The Dow is off 380 and the Nasdaq's down 164. Big tech taking a beating this morning. All of the big names sharply lower, although
look, we know the hedge funds and the suits are shorting the crap out of this market, including the cryptos. Okay, the shorts are having a party right now.
The other big story is Bitcoin and the cryptos. Bitcoin right now, it's hard to get a firm price, but we've got 35,600. That's about 20% lower just in the last 24 hours. As for Ethereum, that had been doing extremely well recently. Big rally. It's going the other way now, off 27%. At latest count, 2,400. That's the price of an Ethereum coin, if I can put it like that. It's a sell-off, folks. Now this. A wealth management firm did the following calculation. If a person had put 3 stimulus checks, April of last year, December, and March of this year, into Dogecoin, that person would now be sitting on $500,000. Oh, no wonder there's so much FOMO, fear of missing out. And no wonder there are so many people investing in cryptos. After all, young, tech-savvy people have been cooped up and plugged into social networks for a very long time, and the government has given them a lot of surplus cash. No wonder there are now about 10,000 crypto coins with a value of $2 trillion. All right, here come the problems. Today, China said cryptos cannot be used as payment, and financial companies cannot offer crypto services. That's a crackdown and a half. And it pushed.
They just reiterated that. We already knew that.
At one stage. Now it's 35. Okay. Watch out.
Oh no. Oh no. This is what I got worried about, folks. Oh my gosh. Binance says subscription and redemption for all Binance leveraged tokens has been temporarily suspended. This is what I said. That's even scarier. That's not good because I did just buy the dip. That could make it worse. Okay. As soon as you start, this is what we're worried about. We literally have talked about what happens in this over-leveraged, over-hypothecated space with these leveraged tokens is as soon as the market crashes, the first thing they'll do is stop withdrawals. They'll stop your ability to sell. And because it's not a regulated institute, well, I mean, there are regulations, they're just not very clear and good. Because there's a lack of transparency and a lack of real regulation for these kinds of scenarios, this freezing of potential withdrawals or I don't, it's just bad. I just don't want, like, if you get more of that or it extends into, I mean, we haven't seen, I mean, you saw Coinbase go down this morning, but you start getting companies going, you know what, we're just going to let you not, and I don't know, I mean, this is leverage tokens, right? But once this turns into, yeah, you know, your Gemini coin, yeah, you can't withdraw that right now. You're just going to have to wait. People are going to panic. That's the kind of stuff that leads to the panic. So I don't know. All I see here is an update. Binance says subscription and redemption for all Binance leverage tokens has been temporarily suspended. I'm not saying that's everything, right? I'm just saying that is a problem. It's going to lead to a lot of disaster. We talked about the danger of over leverage getting exposed in a rapid sell-off in the crypto markets. And that news right here, we literally just got it within the last 2 minutes, is now leading to a renewed sell-off. Oh my gosh. Why when I make these predictions, don't I take the freaking short positions? You know, it's my mentality. Like I just can't short. I don't know. It's my fatal flaw. Okay. I just don't do shorts. I just don't. It's my fatal flaw. But in December and January, I'm like, hey, people might freak out about inflation and we might see a lot of market volatility and potentially a sell-off. Now, I'm going to be transparent about this. I did not think it was going to be this bad. I did not think the tech and consumer discretionaries would sell off this broadly. Now, the indices have done okay, right? But I didn't think it would sell off this broadly, in fairness there. The crypto thing with leverage, this could potentially just be the beginning of the leverage problem. And this Binance alert, folks, look at it. Plummet, plummet, plummet. Now it's all falling because of that. This is the 1 minute chart. Oh, man, no. Binance, come on. Come on. This is what we were worried about. This is why you need transparency with leverage. This is exactly why you need transparency with leverage. This is why you need transparency with the crypto lending and the coin lending and these high interest rates and stuff.
Of course, that can happen at any point in time. So if you feel like you've made a little money, and you're a little nervous and you're overweight Microsoft, you're overweight technology, take a little money off the table, but don't clear out your position. Coming back in is always harder.
That's exactly what a short seller would say.
Well, thanks very much for joining us. We'll see you again real soon.
Bye.
I'm going to transfer our interest away from Bitcoin and the market and go towards President Biden. He joked about running over a reporter with a truck when he was asked about the Israel-Gaza violence. Watch this.
Right. We're not gonna get into the drama right now. Oh man. All right, is that nope. We're losing them. The Titanic's rafts are full. We just can't get anyone else to oh, wait, hold on. Oh, I was on the wrong chart. Nope. Yep, we've lost some more. Volatility did tick down a little bit here. Target Party is the only party today. Target. Why? Okay. Oh, company updating earnings. 5%. I will say, Target, phenomenal company. They got work to do still, and they're getting better. I got to read their latest update. But my last impressions have been that they are way behind Amazon on the online transition. But that gives them improvement potential. That gives them the potential of improving their margin substantially, which they will do. Yeah. All right. Jeez, man. This is something else. Something else. See what CNBC is saying about this. But, yeah. Yeah, for those of you who just joined, I did send an alert out in the Stocks and Psychology of Money group for a crypto buy. I remember all my buys and sells are in there. We'll also have our private course member live stream in a little bit here. Actually, within less than 20 minutes, we're going to do our private course member live stream. We do have this crypto sell-off continuing now to the downside after reports of Binance suspending the redemption of leveraged tokens, which that's literally the last thing you want to hear right now. Very bad. It's just the start of more of this. I do also know that Coinbase was incapable of functioning this morning. I don't know if BlockFi is functioning. It looks like somebody's saying BlockFi is down too. I could give them a shot and try to log in here. Let's see what happens. Oh my gosh, folks. Oh, this is a symptom of too much leverage. Oh, we've been talking about this for months. Oh man, hold on. Oh, look at this. It's a symptom of too much leverage. It's that simple. Too much leverage, too much stuff lent out, too much volatility on the platforms, too much pressure on the platforms. Can't execute trades without a free fall in pricing. It's a disaster. Now, you'd like to be able to say, wow, can it get any worse? I mean, it seems like it's peak fear. You've got a high level of fear, but in this market, you can't say anything's at peak or trough. This is the most bizarre market we've had since March of 2020, when everything was just straight up like a rocket ship. 2020 has been the lamest rocket ever. I mean, this rocket has been like the Virgin Galactic rocket versus a SpaceX rocket. Like 2021 was like SpaceX rocket. You know, it performed. This is a whole different kind of rocket. This is a crappy rocket. Let's look at some of these prices again here. Keep in mind these comparisons, and we've talked about this. These comparisons of inflation to the 1960s and 70s. Many of the comparisons missing the facts that we had substantial wage price controls that broke in the late 60s. We left the gold standard in the 70s. This comparison to the 60s, I think, is a little overblown. It's going to reiterate this fear of, oh, that's it. That's it. You know, if we're following the pattern of the late 60s, that's it. We're going to hyperinflation. It's over. It's game over. Hyperinflation is coming. That's the fear. And the more that comparison is made, hey, who knows? Sometimes fears become expectations, and then expectations become reality, which is bizarro land. But even Target's selling down a little bit right now. What we got here? Tattooed Chef down about 0.5%. Amazon, Costco, Snowflake, Disney, all around 1%. With Apple, Intel, Airbnb. Not too bad at the FANGs. The FANGs, place to be for safety. We've talked about that frequently. How the FANGs, the Facebook, Apple, Google, the Amazon, they've been trading sideways for about 6 to 8 months. But because of that, they've been very resilient in these sell-offs. So far, at least, they've been very, very resilient. It's generally been the momentum stocks that are getting crushed today. Cryptos getting crushed, hammered, falling to the support line we've been talking about. Shocked they fell to these support lines within 12 hours. We're seeing QuantumScape, Link, GameStop, Hyliion, Arcturus, Virgin Galactic, Macy's, Tesla, all of these guys down 4.5% to 5.5%. We also believe this is any kind of sustained inflation fears like this. Oh, come on. Well, this is Bullard. This is just a way to appease the market. Fed President Bullard. Fed will change policy if needed. Well, we know that. But yeah, we don't want to hear that. Hold on a sec. I want to see if they link this. Oh, what happened? Am I in private browser? Oh, okay. Private browser. Follow me at RealMeKevin on Twitter. But I do want to pull Bloomberg. Here we go. Bloomberg. Here we go. Oh, man. World's top crypto platforms disrupted as Bitcoin, Ether tumble. Binance, the world's largest crypto exchange, temporarily disabled Ethereum withdrawals, citing network congestion. Right. Nothing to do with leverage here. Nothing to see here. Nothing to see here, folks. Two firms are suffering disruptions as cryptocurrencies tumble. Bitcoin plunged almost 30% to $31,000, wiping out more than $500 billion in value from the token's peak market value. Ether and ERC20 withdrawals were temporarily disabled due to network congestion. You can't do that. You can't do that to people. People are like, oh, it's just Robinhood. No, it's all of them. You can't do that to people. Coinbase said there are potential outages with its website, mobile app, and API. Hold on a sec. I really want to stay on the market news right now. Hold on one sec here. Okay. All right. Okay. Crypto exchanges frequently suffered outages and problems during Bitcoin's rally. CEO of Coinbase tweeted that the company would be adding capacity. Oh, that's all we got. Folks, the real concern I have is I want to know anything I can find out about anything we could see on potential crypto leverage during this time. I want to learn more about exactly what Binance is up to here. They haven't tweeted much though. What do we have here? Here you see temporary leverage token maintenance. Maintenance. Okay, what is this? Binance has temporarily suspended trading for all Binance leverage tokens except the BTC and Ethereum ones. Subscription and redemption for all leverage tokens has been temporarily suspended. There will be a separate announcement once all affected leverage tokens are open for trading. We apologize for any inconvenience. Leverage tokens are designed for short-term bets on the market. Oh, great. And now you take people's ability away to work with them? Long-term holding of Bitcoin leverage tokens is risky. Now they're trying to slap you in the face and go, we told you so. Oh my gosh. The information should not be regarded as financial advice, blah, 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 blah. It's literally like the companies are now trying to do, yeah, we're going to like not allow you to function anymore. And by the way, we told you it was risky. Did you read our fine print? We told you so. Altcoins suffer outsized losses. Yeah, let's take a peek at this. And I want to find leverage on this. If you are in Discord, I would love you to tag me. Just make sure to tag me at me, Kevin. I need articles on anybody picking up leverage here or getting articles on leverage. That's what I'm looking for. So we're going to do a look for this here together here. Let's listen. Hold on. Let me pull something up here. Give me one sec. Let's listen in here for a moment.
One thing that keeps getting repeated is F-150 audience doesn't want to be preached to. They don't want to be pushed into a new green era. They may not even want to buy a car that is seen as somehow a Biden mobile.
I don't want to talk about Ford. Talk about the other. What is this? This is unbelievable. Okay. I don't know. There's got to be a way for me to see crypto leverage. No. Okay, I'll just try Google. There's got to be a way. Okay, here's somebody. Crypto leverage. Here we go. Okay, well, this is interesting. BTC long liquidations. Ooh, this is interesting. Thank you for sharing this. So here we go. BTC. Oh man, long liquidations across all exchanges hit all-time high. So a long liquidation is just somebody who owns the coins or the they're basically securities or the assets, we'll call them. They're not short, so you just have a long position. But it's potentially leveraged. Liquidations across all exchanges hits an all-time high. Oh my gosh. We talked about this. The leverage in the crypto space. Every crypto CEO I've talked to, and this is what's scared. This is what's so scary. What's so freaking scary is every crypto CEO I talk to, I go, I'm worried about leverage. I'm worried about the rehypothecation. Oh, okay, thank you. Let me try to pull up. I'm worried about that. And every single one of these CEOs has always responded and said the same thing. And you know what that same thing was? Well, we have systems in place. We're not really worried about it. The regular financial system, they use leverage too. Good does that do you? Bloomberg Live for me is on commercial, but thank you for pointing it out, Kevin. So I'm sure they'll go back to this. So what else do we have here? Note the data includes BTC. Well, this is only BTC, so you can only imagine the leveraged liquidations on the other. Okay, go away. Please sign in or sign up. Well, whatever, crypto quant here. I guess I'll just, there we go. What's this? Reserves. Ooh, this is interesting. This is a nice chart. Crypto quant. Exchange flows. I like that. Miner flows. Bank flows. Ooh, this is nice. Oh, we gotta play around with this. Let's do this. Crypto quant. I'm gonna sign up really quick. Hold on a second here. This is hashtag not sponsored, but yeah. Let's come back to this. Give me 1 second here. What do we got over
to
here?
both the president and his cabinet talking about the colonial.
No. We don't care about the colonial
press releases every so often just to kind of give.
Okay, give me a second. I'm going to sign up for this. We're going to play around with it.
Progress. And I think we like to see market share leaders, particularly on the charging side. We like ChargePoint, have about a 70% market share for in the U.S. for public charging. And they hope to take share in Europe. So, I think we like to see technological strength and also market share leaders that could ultimately improve gross margins over time.
Yeah. Well, good luck right now.
It's fascinating, and it's getting a lot more interesting starting tonight with Ford. Gabe, thanks a lot. Good to see you again. Gabe Dowd over at
likewise.
Cowen.
Thanks, guys. Take care.
Coming up, a major restaurant stock. It's almost tripled over the last year. We're going to speak to the CEO on the other side of this break. Plus, we'll give you another check on Bitcoin. It is off its lows significantly, but still down almost 18%. Squawk on the Street will be right back.
All right. So I should be able to sign in now. Let's do a quick exploration here. All right. Give me one sec. Log in. I already did verify my... Come on. Dude, I literally just made the account. And they're like, oh, no, your password doesn't match. Like, or your password's wrong. I'm like, I just made it. I feel like an idiot. Okay, so while we pull up Crypto Quants here, let's just give a quick little recap of what's happening here, okay? So people are freaking out because you've got now comparisons of inflation to the 1960s. Here, let's do this. Let's do a little summary to catch everybody up to speed while I try to log in here, because apparently I forgot my password 30 seconds after making my account. Whatever. We know that the crypto it's stupid. Oh, hold on here. I got in. There we go. Okay. And I want to give a summary, and then I want to. No, it's still not working. I want to give a summary, and then I want to get. This is ridiculous. Whatever, Crypto Quant. Whatever. That's all I have to say. Okay, so let's give a quick summary as to what's going on here. So here's what's going on. People are freaking out because they fear that we're potentially returning to what happened in the late 1960s in terms of inflation. Darn it. Hold on a second. I really want... Why? It's not going to happen. It's not going to happen. We're going to look at the Twitter and the Discord links. That's what we're going to do. We're not going to care right now. We're just going to look at the things y'all are sending me. Like this. Look at this. Total liquidations. What is this? Total liquidation. This is interesting. Traders are getting wrecked. Over $4 billion worth of liquidations in the last 4 hours. Nearly $8 billion of liquidations in the last 12 hours. Wow. Yeah, thank you. Keep sending me these links. I mean, these are big liquidations here. My goodness. Status for Gemini. Let's see what Gemini said. Wow, look at this. Gemini 2. How do you join the private streams? Once you join the Stocks and Psychology of Money group using the code 2 of the moon down below, you could join with by watching lecture 1.0. That'll get you right in. But anyway, look at this. Status Gemini. Systems are currently experiencing degraded performance. Well, that's degrading. You've got Coinbase. Coinbase status. This is bad. Delayed Ethereum withdrawals. This is what we talked about. As soon as you see leverage becoming a problem, the first thing that happens is the firms start saying, yeah, by the way, you just can't sell right now. Yeah, we got to protect ourselves first. And remember, we did survive March of 2020, so we'll be good in any scenario. Don't worry about us. The kind of like, to me, that kind of stuff is a red flag. You know, when you like, how many CEOs have we interviewed about cryptocurrency, and how many of them are like, oh no, everything's always gonna be fine. Really? Until it's not. It just pisses me off. No, there we go. Oh wow, I think I finally got in. Did I? Okay, because I do want to do a recap, and then in fairness, we're going to jump on over and do the. Well, let's do a recap here and see what else is going on, because there's still news plowing in on these liquidations, and the liquidations are just accelerating the sell-off. Okay, I wanted. Oh my gosh. Okay, Crypto Quant. Signing up for Crypto Quant has probably been the most complicated thing I've ever done in my life so far, which is very, very bizarre because, okay, there we go. Congratulations. You've changed your password. Okay, let's do the summary I keep promising. And then let's look at the sticks again and see a little. Oh my gosh, I actually got in. Okay, let's do the summary and let's explain what's going on, okay? All right, folks. The market's in crisis mode right now. Here's what's happening. People are fearful that 1960s style inflation is back. In case you're not familiar with that, here's a very quick primer. When the Korean War ended in the early 1950s and Korean War-related spending came to a halt, we saw war-related inflation, which wars lead to shortages and spikes in prices. Remember, guns and butter, and this is the original definition of guns and butter, not the definition of guns and butter that we use when we talk in stocks and psychology of money, because we've redefined it to something that relates to us on a daily basis. Obviously, those of you in the programs know. More importantly, though, back in the early 1950s, you did have inflation because it was wartime. Wartime shortages leads to temporary inflation. Great. That temporary inflation proved to be temporary, and inflation levels fell to low levels that we've actually seen over the last decade now. We have seen inflation bouncing around 1.3, 1.4, 1.5%. Guess what inflation was bouncing around between 1951 and about 1965? 1.2, 1.3, 1.4, 1.5%. You had very, very, very low inflation during the post-war sort of boom in the 50s to the mid-60s. Now, unfortunately, starting in the mid-60s, we started having a lot of social spending, which sounds very, very similar to the COVID relief packages, followed by this $4 trillion Biden infrastructure plan. Now, initially, economists have said, well, wait a minute. In the 1960s, like in 1965, we had wage price controls. We had just regular price controls. So we had price controls on general prices and price or limits on wages. And so it was sort of as a way in the 60s, the mid 60s, of actually caging inflation. Like literally, think about J-POW going, we're literally just going to make it so prices can't go up, which makes shortages even worse. And eventually the free market takes over and breaks out of the cage. Well, that's what happened starting in 1967 to 1968. These artificial price limits, which right now we don't have. We don't have price limits. We have supply chain constraints, which are pushing prices up. Prices are free to go up. They're going up. Look at lumber. Look at wheat. Look at coffee. Look at meat. It's all going up. And they fluctuate, obviously, in the short term, but commodities are through the roof. Prices are through the roof. Wages are going up. Bank of America just yesterday talked about how now their minimum pay is going to be $25 an hour because they can't attract workers anymore. McDonald's is paying people $50 just to show up for an interview. Some McDonald's are paying people $18 an hour, apparently. It's nuts. And so economists initially said, look, the 2020 recovery is different from 1965 because this time is different. Never heard that one before. Because the COVID spending was one time. In 1965, we had this recurring spend. At the same time, in the mid-1960s, late 1960s, you had a Federal Reserve that was really nonchalant about everything. They're like, yeah, we don't need to do anything. Like literally, that was their attitude. Now you have a very different Fed. You have a Fed that's we're prepared to act if we need to. We got the tools, aka interest rates are going to go up. We'll act if we need to. You got the market expecting that the Fed is going to act and raise rates sooner than expected. You do still have Federal Reserve Chairman Jerome Powell kind of doing the, look, I've been telling y'all I want 2% inflation. Now we're starting to see inflation and you're freaking out. This is what I want. So you have a little bit of some differences here. So it's, what do they say? It's not exactly the same, but history tends to rhyme. Doesn't necessarily repeat itself, but it can rhyme. Anyway, so late 1960s, 67, 68, you start getting this inflation because wage and price controls, limits on prices going up, start getting removed. And so this leads inflation to start going up 4, 5, 6, 7% going into the 70s. Then at the same time as you start seeing these inflationary pressures, we decide, let's just leave the gold standard and literally make our dollar backed by nothing. But the belief, which is what it is now, our money is just backed by the belief that it has value. So anyway, that obviously led to the hyperinflation that we saw in the 70s, which was, 10 to 15% inflation, interest rates, 10, 15% ranges, mortgages, double digits, which led to, what year was it? Volcker's Saturday night. Volcker's Saturday night. Volcker's Saturday night was 1979. Volcker's Saturday night was his anti-inflation movement. Really, really big day in history, where basically you had this decade of now inflation from like 70 or 67, where it started, to 79. And Volcker's like, that's it. We're going to go through the bloody disastrous pull down that we need to do, which turns into the Ray Dalio style great deleveraging, where you get a painful crash in markets. People get rid of debt. One of the reasons I've been talking about deleveraging for the last 6 months on this channel, and nobody wanted to hear it. This is also why I'm like, I'm going to get rid of my margin and I'm going to buy long options, not because those options can't go down 99%, but because at least they'll still have value left over when the market recovers. Whereas margin, you get liquidated on a margin call, you don't. You got nothing left. It's just gone. That's the danger of margin versus options. A lot of margin, obviously. But anyway, so now Volcker raises interest rates substantially. You get a sell-off. You get a deleveraging, which is stuff that we have been warned about. Ray Dalio has been talking about this great deleveraging coming, that maybe the 2020s are going to be more like a decade of deleveraging, where people are like, that's it. I don't want debt anymore. I want to pay down debt. Maybe you get what I've been calling a frugal decade happening, where people, we get this initial surge in spending, people going back to Disney, people traveling again or whatever. And then you get folks deciding, you know what, I'm good spending. I'm just going to focus on my financial house. I don't want to spend as much as I'm used to spending. And then really what happens is this fear of that sort of 1960s, 1970s style progress is leading to a lot of shorts in the market. We've seen shorting in the market go parabolic in the last 2-3 months. And it's because it's been very, very profitable. Anybody shorting tech and certain consumer discretionaries, especially online, has been very, very profitable over the last 3 months. The shorts are winning. And the shorts really started by hedging their long positions. You're long on Tesla, you hedge with shorts. You make lots of money on the shorts, maybe you hedge a little more. And then that spreads like wildfire through the hedging and shorting and the weenie baby community. And they're winning right now. Fairness, the weenie baby shorters are winning right now. So you get the lever or the shorts winning. Then we've been talking about this. We look at the crypto market. What has not sold off yet? Because when short sellers make money, when they make a lot of money shorting the market in one area of the market, what do they want to do, folks? They want to make more money. So they start looking around going, well, what else can we short? Oh, Ethereum doubles in 30 days? Oh, that sounds a little juicy. Bitcoin up, what, $40,000-$50,000 in the last 6 months? Seriously, that's simple. Institutions can short crypto. We don't have easy access to shorting crypto. So the institutions who make up the majority of crypto traders now, they've replaced us retail traders, can set up all their shorts and watch all of us get squeezed out of the market, especially if you've taken on leverage, which now we're seeing mass liquidations, $4 billion of liquidations within the last hour, $8 billion worth of liquidations in the last 12 hours, are reports we're seeing. Coinbase is shut down. Well, at least partially. halting Ethereum withdrawals. You got Binance saying leveraged tokens, redemptions for leveraged tokens are not available. So you got crazy liquidations happening. You got Coinbase, BlockFi, and Binance all down to some degree, which is very reminiscent of the concerns that we've been talking about on this channel, that what happens if we have mass, oh, here we go. Kraken says Ethereum and ERC20 token deposits and withdrawals are currently delayed. You can't take your money out. You just can't take your money out. This was the big fear we've been talking about on this channel. And this, I'm worried this is, I want it to end, okay? Like, don't get me wrong. I do not want to see this crypto nightmare continue, because all it does is hurt the retail folks who are just getting started with investing. It's not like my interest in buying the dip is not greater than my love for people not getting screwed. Like, I don't want to see people getting screwed. And margin is screwing people here. This is why we're seeing these liquidations. But the problem is, it's not just people's margins. It's how much leverage is in the crypto system. I don't know. I mean, so far we're stable. Okay, like let's look at the sticks. So far, we have fallen to the levels that we thought things might fall to. We briefly fell lower, but we're in that low 2000s range in Ethereum. These were where we've had longer term supports. Bitcoin has had longer support between 32 and 34. It's actually bouncing around 35. So it's doing a little better than expected, at least where it's bouncing right now. And it's bouncing around that 35,000 right now. Doge does have a support line. I didn't just draw that line today. That line has been there for a very long period of time. Doge has had this, support around, and this rubber bands around here. We got another update here from Coinbase. Intermittent downtime on Coinbase platform. We're currently investigating the issue, trying to implement fixes. But anyway, crypto, the next levels of support, I don't even know that I want to look at them. We'll do it. But folks, this is tough. I mean, look at this. For Doge, I mean, low 20s is the low to mid 20s is the next level of support for Doge if we get a continued sell-off. And then after that, I don't even want to talk about that, because literally, if we break through the low to mid 20s, folks, there's nothing between the low to mid 20s and 5 cents. Nothing. And even 5 cents didn't last that long. Ethereum, red candle sticking, obviously, this is on the day chart here. So this is what we were talking about, prior longer term supports right here. But if we fall past this, if we start breaking 21 consistently, I don't know, what do we got? Let me get, if I could get a week, that'd be nice. I don't think I can though. Yeah, okay. Yeah, 1900, maybe a temporary shelf around that 1400 level, maybe. And I don't want to go past that. Bitcoin, and I don't think we need to. I mean, this was good. Otherwise we did have a little bit of a shelf here at 1819. I don't see that happening. The only way this happens, in my opinion, okay, the only way we go to 18,000 Bitcoin, and just don't trade off this advice, okay? Like, you lose money, it's your problem. It's not my fault. But just my uneducated opinion here is, but the only way we go to Ethereum 1,300, Bitcoin 18, 19,000 is if we get this continued platform unavailable crap at all the different crypto platforms. All of a sudden, you get more and more leverage fears of, oh my gosh, maybe the system is over leveraged. More and more people dumping, leading to more and more liquidations. That is the over leverage in the system is the big concern. At the same time, anything crypto related is selling off dramatically. Dramatic sell downs in anything crypto related. Marathon, Big Digital, Riot, Voyager, Hut 8, all these guys down 10, 12%. AMC, momentum stocks down 10% here on AMC. Coinbase down 9.4%. Very Good Food Company down 7.5%. Wow. QuantumScape down 5.4. Tesla's down 420%, like 4.2%. Square is down at 195. A lot of pain, not a lot of green. Only thing really doing well today is Enphase, SolarEdge, and Target. Otherwise, you're either flat or you're losing today. It's pretty rough, and it's all coming off these leverage fears, great deleveraging fears, and inflation fears. So that's a summary as to what's happening in the market right now. A lot relating to those 60s to 70s fears, especially with Fed President Bullard coming out this morning. Literally this morning, he goes, "Don't worry, we will act if necessary," in response to the madness that's happening. You know, I think Jerome Powell is sitting there with a cigar right now going, "Folks, I've been telling you for a long time, 2% inflation was coming. Now you're freaking out. We might be seeing 2% inflation." You know, like that's like, I feel like Jerome's like, you know, got somebody fiddling right now. You know, like, I told you this was coming. but to him, it's all according to plan. That this is just going to be a temporary, a lot of pain until we actually adjust to getting 2% inflation. I don't know, folks. We'll keep tabs on what's going on, but this is the summary of what's happening in the market. If you want to join me in the private live streams, we will be going live in the private live streams. I might, honestly, if this madness continues, we might even do a couple private live streams today. I don't know. We'll see. But if you want my perspectives in private, you want to ask questions, do consider checking out the Stocks and Psychology of Money group, a link down below. You can check out the other courses as well. You get the live stream access as well. So if you prefer real estate investing, whatever, use that coupon code expiring soon. Link down below, probably Friday. Thank you so very much for being here, folks. We will see you in the next one, and good luck. I got to find the end button now. I can't